Hey guys, what's up? Alec back with the daily stock market, and look at that. We've had a very interesting week to say the least. Disney stock is up 11%. We have the stock market closing at record all-time highs. NASDAQ, S&P 500 setting new records. We're setting new records in the stock market every single day. The stock market is roaring higher and higher. It's exciting time to be a part and be an investor in the stock market. Now, today is Super Bowl Sunday, so we will make it a quick video for you guys. I want you guys to enjoy your Sunday, and maybe you're watching this on Monday as the stock market opens instead. But we do have an exciting earnings week, and just to fill you in with what's going on this coming week, Tuesday before the open, this is for the week of February 12th, by the way, we have Shopify reporting, Coca-Cola, Datadog, Marriott, Hasbro. So a lot of big companies in a lot of different sectors Tuesday before the open. After the close, we have Airbnb, Upstart, Robinhood, Lyft, MGM Resorts, Zillow Group, GoDaddy, Instacart. So again, a lot of different companies are reporting from a lot of different sectors. Now, Wednesday before the open, we have Barrick Gold, Sony, CME Group, Kraft Heinz, and that's about it for Wednesday before the open. Moving over to the close, we have Twilio, Cisco, Fastly, Upwork. Thursday before the open, we have Crocs, John Deere, Yeti, Penn National Gaming, Shake Shack, Wendy's, Oatly. And then after the close, we have DraftKings, which we're definitely going to be talking about in this video for the Super Bowl. We'll kind of make it a little bit more sports focused, and DraftKings is a great sports stock. We also have Coinbase reporting, Roku, The Trade Desk, DoorDash, Open Door. So Thursday is definitely exciting with Coinbase and even DoorDash, DraftKings, and Roku. So without any further ado, let's dive into these stocks a little bit deeper. I think the most anticipated ones this week are going to be Coinbase, DraftKings, and then we also have like Robinhood earlier in the week, Lyft, Upstart, Airbnb, Shopify, Coca-Cola, Marriott, MGM. Those are going to be some exciting ones to look forward to this week. And the first stock that we're going to talk about is DraftKings, ticker symbol DKNG. It's an exciting stock, up 5.2% just in the past week. It's a gaming stock, an online gambling stock, and it evolved really because it used to be more of a football fantasy online draft picking company, but it's evolved and now it's one of the leaders in sports betting, sports gambling, online gambling, which is a huge growing industry that could still skyrocket because it is a market that hasn't been tapped into fully yet. It's still untapped, and it's a newer growing market because if you remember a few years back, online betting and gambling was totally illegal. Now states are legalizing it slowly, and the more states and the more normalized it becomes, DraftKings only is going to benefit from that moving forward. In the past month, they're up 29%, by the way. In the past 3 months, they're up 24%. So their real rally has started at the beginning of the year, and they've gone up around 30% since then. Now, in the last year, they are up 168%. Earlier last year, around Super Bowl time, 2023, you can pick up DraftKings around $16 per share. Now they're closer to $43 per share in present day. If we look at their history, they IPO'd in 2019. They were a part of the big 2019 IPO. If you guys remember how many IPOs were coming out at that time, they listed for around $10. And just in the span of 1 year, the stock went up 553%. So it was the talk of the town at the time. Obviously, everyone wanted to get in on the action, and it continued to roar past that all-time high that they set in October 2nd, 2020 of $63 per share. It continued to roar even higher to $71 per share. But unfortunately, that came to an abrupt ending because in about 6 months to 8 months, maybe even a year, we saw the stock drop around 81% to $11 per share, and it hovered around $11, $15 per share for quite a while. Almost a full year, it was hovering around those prices, and around the beginning of 2023, we've really started to see the stock pick up. And the question is, can it make it to new all-time highs, $70 per share once again? Or will the stock fall below $20 a share again and closer to $15 per share? So let's read about it. DraftKings is a digital sports entertainment and gaming company which engages in the provision of online sports betting, online casino, daily fantasy sport product offerings, DraftKings Marketplace, retail sportsbook, media, and other consumer product offerings. We can see that they were founded in 2011. They have a lot of employees and they're a negative earning company because if we look at that PE ratio, we can see it's negative 19 with a market cap of 20 billion. So this is not a small company by any means, but just last year they were a fraction of the price. They were only around $10 per share, making their market cap closer to only 5 billion. Okay, so it's definitely grown and can continue to grow. As we scroll down, we can see that their earnings are very sporadic. They're trying to earn their way towards profitability and they're on the cusp of profitability, which is an interesting thing to see when you're investing in a company, because if they can move the needle into profitability the next 5 quarters, for example, and keep growing into like $1, $2, $3 EPS, that's a very, very bullish thing for the stock price overall. And if they're able to make that happen, then there's a very good chance that they will see new all-time highs once again. Now, some bullish things to look forward in DraftKings. We can see DraftKings' financial profile is strong, positioning it to invest further into its online bookmaking platform. DraftKings' in-house technology platform affords it more control over leveraging customers' data and developing and launching products. We see DraftKings' online platform as well positioned to participate in the $40 to $50 billion North American sports betting and iGaming revenue opportunity by 2030. So in the next 5 to 6 years, we can see this industry of online gambling and online casinos grow rapidly, and DraftKings can be one of the biggest benefiters in that sector. So some bearish things to watch out for. Political agendas can delay or prevent legalization of sports betting and gambling, especially in certain states that aren't allowing it yet. It's not legal in all 50 states yet, and it's a very new and cutting edge type of laws that are being passed. These are all revolutionary laws because it was illegal for an extremely long time. So there is a lot of risk with a company like this because nobody knows what's going to happen for sure in this sector. Online gaming operators face intense competition with state licenses amounting to more than 24 different licenses that you need in some states. And some, remember, it's just totally illegal to do it at all. Now, I don't want to spend too much time on DraftKings, so let's go over this a little bit quicker. We can see DraftKings earnings expected to grow. What to know ahead of next week's release. We can see that DraftKings is expected to deliver a year-over-year increase on its earnings with higher revenues when it reports for that quarter end December 2023. This widely known consensus outlook gives a good sense of the company's earnings picture, but how the actual results compare to these estimates is a powerful factor that could impact its near-term stock price. The earnings report, which is expected to be released on February 15th, 2024, might help the stock move higher if these key numbers are better than expected. On the other hand, if they miss, the stock could move lower. While management discussion of business conditions on the earnings call will mostly determine the sustainability of the immediate price change and the future earnings expectations, it's worth having a handicap insight into the odds of a positive EPS surprise. The company is expected to post quarterly earnings of 6 cents per share, which is a positive earning statement finally on their EPS, which is a very bullish thing for the stock price overall, and it's going to be a great headline that reads that DraftKings is now in profitability, okay, and that represents around 111% change on the year over year, Revenues are expected to be 1.22 billion, and that's up 42.9% from a year ago quarter. So overall, earnings is looking bullish for DraftKings, but if you want to see exactly what I'm buying this week ahead of earnings, calls, puts, if you want to see all that stuff, we also take polls in the Discord. Make sure you message me on Instagram at the Daily Stock Market to get into the private trading group. Click on success number 9, success number 8, 7, 6, and read through some of these positive testimonials. Lots of people are making money time and time again. So it's time for you to join the group and see some of these gains yourself and start having your money work for you in 2024. So let's make some money together. It's super easy, even for beginners. All you have to do is follow my signals, when to buy and when to sell. You get an alert for both. So message me here, the Daily Stock Market, 224,000 followers, 878 posts. Okay, but let's continue with this video because there's another exciting stock to talk about that's reporting earnings this week, and that's Coinbase at $141 per share, up 7% on Friday alone, 10% in the past week, 49% in the past 3 months, and they peaked as high as $186 per share, which was around a 90% movement just from November 10th to December 28th, 2023. Okay, so a lot of things happening with Coinbase. We can see it's starting to bounce back from its lows. It was as low as $35 per share. And if you remember, I was making lots of videos at that time saying that Coinbase stock is a buy under $50 per share. Heck, it's even a buy under $100 per share. Now we see it at $141 per share. And the question is, can it get back to around $250 per share when it IPO'd in 2021? Okay, it went as high as $332 per share, up 33% from its IPO. And then it went on to go down, 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 falling around 70 to 80% and losing its share price all the way to $30 to $50 per share. So as we scroll down, we can see that the anticipated questions, one is from Brian W. We can see that a lot of shares are represented in this question. What is the plan to expand revenue drivers outside of the ETF custodian plans? The market shifts quickly and Coinbase needs to be nimble both within the US and abroad. We've seen your shift into European markets. How will this evolve going forward? And they really want to see, we really want to see the answer being we are going to be opening up in European and not only European, but Asian Pacific markets also. So Asian markets will be very exciting to move into, and if Coinbase is widely adopted in those regions also. Why do insiders continue to sell their shares daily? That's a very good question, but it's also probably because they were buying a lot of shares at $35 per share and now it's $140. That's a huge increase, but it also can be as complex as, locked up prices. They can only sell after a certain date. Now that they're not locked anymore, they have more opportunity to continue to sell. What is Coinbase going to do to offset the lost monthly interest income due to the Bitcoin ETFs? How many countries does Coinbase plan to operate in by 2026? I think this is a very good question about how many countries, because that's really where the expansion lies right now, is that Coinbase needs to be a global brokerage and not just a US Canadian brokerage. Moving on, is there a chance to Coinbase pays dividends? How will the halving of Bitcoin affect Coinbase strategy for the next year? It's a very bullish thing, actually. So that's another good question. We can see that they are a negative earning company. Also, we can see that the market cap is still fairly low at $33.97 billion. As we continue to scroll down, we can see that the EPS has been a surprise every time to the upside, and they've been beating expectations at least for the last 3 quarters. Okay, so they're getting close to profitability also. That'll be a great headline to see if Coinbase can get to profitability. So just looking at a few headlines, we can see Coinbase rally is setting itself up for a bigger fall when it reports as an analyst. We can see Coinbase overvalued into earnings as Bitcoin headlines dip. Okay, but this one was an interesting article. Coinbase Global Inc., ticker symbol COIN, expected to beat earning expectations. What to know ahead of the Q4 results. Wall Street expects a year-over-year increase in earnings on higher revenue when it comes to Coinbase. Their earnings report, which is expected to release on February 15th, might help the stock move higher if these key numbers do hit. Okay, we can see that the company is expected to post quarterly loss of 6 cents per share in its upcoming report, which represents a year-over-year change of a positive 96%. So they are not expected to actually report positive EPS, but they're coming a long way from last year, from 12 months ago when they reported, up 97%. And they're very close to profitability with only a loss of 6 cents per share. And because it's so close, that 6 cents per share, it's very close to zero or 1 cent, 2 cent, 3 cents per share. There's a good chance that actually Coinbase could come in with a surprise and actually post, it's expected to post a loss, but it could actually report a positive earning quarter, which would be huge for the stock and probably skyrocket the stock around 10% if they did do that. Revenues are expected to be at $731.94 million, up 16% from a year ago quarter. The consensus EPS estimates for the quarter have been revised 50% higher over the last 30 days to the current level, which it is at now, which is negative 6 cents EPS. This is essentially a reflection of how the covering analysts have collectively reassessed their initial estimates over the period. Investors should keep in mind that the direction of estimate revisions by each of the covering analysts may not always get reflected in the aggregated change. So if we look at what this article has to say for Coinbase, the most accurate estimates is higher than the Zacks consensus estimates, suggesting that analysts have recently become bullish on this company's earnings prospect. This has a result in EPS of 166%. On the other hand, the stock is currently carrying a Zacks ranking of a number 3. So this combination indicates that Coinbase Inc. will most likely beat the consensus EPS estimates. Coinbase does appear as a compelling earnings beat candidate. However, investors should pay attention to other factors also for betting on the stock or staying away from it ahead of its earnings release. And industry players' expected results. And I'll scroll through this article slowly, so if you want to pause it and read through some of this yourself, feel free to do that, but we just don't have time to finish this article in this video. And again, if you rather just see exactly what I'm buying, strike prices, option calls, puts, exact expiration dates, when to buy, when to sell, just reach out to me on Instagram, The Daily Stock Market. Click on success number 9. Read through some of those positive testimonials. So come join our private trading group, our stock market family, and develop some money. Make some money in the stock market in 2024. Now's the time. Stocks are absolutely rallying. It's earnings season right now. There's a combination of things going on that it is a beautiful time to get invested in the stock market. We do not only option trading, short-term trading, but we also do long-term investing. So if you need help with your long-term portfolio, also message me on that, and I'll be more than happy to go over that with you. Thank you guys. I hope you enjoyed your Super Bowl Sunday and you were able to spend some time with some family or friends and eat some good food. So thank you guys one last time for all the love and support you show on Instagram and YouTube. Subscribe on YouTube for all the full-length videos. Share this video with a friend. Hit the like button, and I'll see you guys in the next video. Remember, don't time the market, buy the market. Peace.